Who else will be our co-host? I need those people
Martina.
Hi.
Is Martina on this
Hi.
call? Okay, Martina, you'll be our co-host. And who
Call.
else? I need one
Call.
man.
Emmanuel. Patron.
Kayode. The man is
Okay,
here.
Silas.
is it Kayode?
Silas.
Kayode, yes.
Emmanuel.
Kayode is
Silas.
here.
Okay. Judith, you can unmute and speak. Let me know that you are my co-host. Then Martina as well. I've added
I'm here,
you.
sir.
Yes, sir. I can hear you.
Okay, I hope your background is very fine. If
Yes,
it's not
sir,
fine, just let me know so that we can nominate another person.
it is.
I
Okay.
can speak too, sir.
I know it's not about speaking. I'm talking about the background. I don't want a noisy background.
Okay, sir.
Kayode Adebayo, you are a co-host.
Okay, sir. Confirm, sir.
Is your background okay? It's very, very important.
Yes, please. It is.
Okay. So I think we can start with this. Okay. Good evening, everyone. You are welcome to the case study Preseen class for May 2026 diets. The Preseen is what we are going to go through first. The Preseen information is not new to you. You have this material as far back as let's say more than a week ago that you've had this material. And the expectation is that you have read it over and over. So in order to reduce our time in reading the Preseen, we have gone through a discussion of the Preseen information in our WhatsApp groups so that you guys will be familiar with the scenario of the Preseen information and more importantly, the industry that the examiner is looking towards these diets. So we've looked at the Preseen, right? But I will not assume, because of some persons that may not join or that may not have time to go through those discussions. So I'm going to start afresh, right? May 2026 case study. You can see time allowed 4 hours, including reading time. Then you have instruction. You have to use the case study answer booklet for this paper. You have Preseen. This material is issued prior to the examination date to enable you familiarize yourself with what? With the case scenario so that you can undertake any research and what? Analyze an analysis that you deem fits. The Preseen part of case study examination is also published on what? On the institute's website. So, and that's the information. It went on and on. You must not bring this material with you to the examination hall because they are going to give you both this and the unseen. You're going to have the full case in the examination hall. So there's no need to bring it along. There's no need to bring it along. Okay. So let's move on. All these are preliminary information. So there's no need for us to waste too much time on it. So let's move to the case study proper. So the Preseen information for these diets, the company you are looking at, the name of the company is Sadeco Cocoa Processing Limited. We are going to be making use of the acronym of that company so often in our analysis, also in our solution, our reports, in order to save ourselves time and for ease of reporting. So I'll be mentioning of SCPL more often. Okay, then we have list of exhibits. In this case, we have 5 exhibits in the Preseen. And those are the exhibits we have. Exhibit 1, about you. Tokunbo Adeolu, that is your name. That's the name you are going to bear for how many hours? For 4 hours in the examination hall. Your employer is who? Your employer is a consulting firm. And the name of your employer is who? Garba, Chukwemeka, Adelani, and Co. Chartered accountants. So that is your employer. So you work for a consulting firm. You work for a consulting firm. Then Exhibit 2 is talking about the cocoa business in Nigeria from the golden era to challenges and revival. We went through all this in our class discussion, I think on Thursday and on Friday. Exhibit 3, we also went through it. Exhibit 4, which is on Sadeco Cocoa Processing Limited, the company, which is your client itself, about it. We went through that. Then Exhibit 5 is talking about the Sadeco Cocoa Processing Limited financial statement summary. So Exhibit 5 is about the financials. So let's take the exhibits one after another. I won't waste much time on this because we've already gone through it. You are Tokunbo Adeolu, an accounting graduate writing professional level of ICANN examination. You are employed as a trainee in the firm of Garba, Chukwemeka, Adelani and Co. Chartered accountants, reporting directly to Thomas Chukwemeka, a partner in the firm. Your position requires proactive approach to client service and technical competence in accounting, financial analysis, and business advisory. So what we are trying to say here, this what Exhibit 1 is saying in a nutshell is that your name is Tokunbo Adeolu. You are working for a consulting firm, and the name of the consulting firm is Garba, Chukwemeka, and Adelani and Co. Chartered accountants. And what this is telling us is that this report is an external report because they've already given you the name of the company that is your client. So that's about Exhibit 1. So we are really not wasting much time on this because we've gone through it. So Exhibit 2 is simple. We have gone through Exhibit 2 as well. What Exhibit 2 is talking about is the historical developments of the cocoa business in Nigeria from the golden era to the challenges time and to the revival era. So we went through this on I think on four phases. I broke it down in a way that every single person should understand if you followed us, or if you know what you are doing. So we broke it down into the golden era, which is characterized between 1960 and 1980. And we went through the challenges time. I went through the revival time. And also we also had some nuggets on the future prospect of cocoa business in Nigeria. So that's about Exhibit 2. So if you followed that particular discussion that we had, you would understand that we have gone through this because we broke it down in a very, very simplified manner. So there won't be chance in reading this all through. Because if I'm just reading it, I'm just reading it to your hearing. So you guys know how to read. What is more important is for us to analyze this. What are the things that are necessary for us to look out for in this particular exhibit? Okay, that is about Exhibit 2. Then Exhibit 3 is talking about the cocoa processing industry in Nigeria. So this one as well, we add a glimpse of what it is talking about. What your examiner is talking about here in this Exhibit 3 is the cocoa processing industry business. What does it entail? What is the overview, the current status, the production volume, the size and capacity of what we produce in Nigeria, the technology and infrastructure, and how it impacts the business, right? The fact that what are the challenges, infrastructural challenges we have in Nigeria, which affect business as a whole. Good example is inadequate infrastructure, unreliable electricity supply, poor transportation network, limited access to modern storage facilities. All these are challenges infrastructural challenges. So then that exhibit your examiner is also talking about the product range and quality. What does quality mean in this business? Quality assurance is very, very key. One, because this is food. It is food. So quality is important because we consume this. Number two is that cocoa is an international cash crop. Cocoa is an international cash crop. So what it means is that quality is very, very important because any product you make will be tested with international standard. So then we looked at the market and distribution, then regulation and policy environment of this business, financing and investments. Then I think lastly, we had a glimpse of what SWOT analysis is in this particular industry. So that was about exhibit 3. That's about exhibit 3. So then exhibit 4. Exhibit 4 is talking about Sadeco Cocoa Processing Limited. Sadeco Cocoa Processing Limited, which is the company, your clients that you are working for, the clients that your firm is doing this service for. So we went through the overview of the company. So I think this one, I really did not do it that much because it's just an history of the company. So I'm going to be mentioning some important things for us here so that we can note, because all those information that they are provided here will still be useful to us, but then we start to provide a solution, right? So we have company overview. Sadeco Cocoa Processing Limited, founded in 2014 in Ondo State, a region renowned for its significant contribution to Nigeria's cocoa output. The company was established with the aim of adding value to Nigeria. Someone is asking how far Taiwo Garba. I don't know. Okay. The company was established with the aim of adding value to Nigerian cocoa industry and positioning itself competitively on the global stage. To achieve this, SCPL invests in a medium-sized cocoa processing facility with the capability to process around 10,000 metric tons of cocoa beans each year. The company's initial operation focused, The company's initial operation focused on the production of cocoa butter, cocoa cake, and cocoa powder. So those are their 3 major products, supplying both domestic and export. Someone is asking whether as the lecturer started. Can anyone hear me? Is it that person cannot hear me?
We can hear you, sir.
I can hear you, sir.
Okay. I think maybe it's the person network. During its formative years, SCPL experienced moderate growth by tapping into the rising domestic demand for cocoa products and securing a handful of export contracts. However, over the last 5 years, the company has encountered numerous difficulties, which has resulted in considerable financial losses. Okay, so they are giving us an overview about the company, their history, and the current situation they have. So then followed by the board of directors and management team. So that one is just for the information sake of it. So then we have the current challenges. This is very, very important to us. The 2 main challenges that this company is having is number 1. Please, someone has unmuted. Is it Martina? Martina, please mute.
Sorry.
So current challenges, there are 2. 1, lack of working capital. And the second one is what? International rejection of products. So that's the two major challenges that this company is facing. And that is that those challenges will lead to the services that this company is giving to your that this particular service is given to your consulting firm. So let's look at the first one. Lack of working capital. Can someone read for us? Martina, please read.
Okay. So I should read from where the second or first challenge.
The first one, lack of working capital.
Current challenges, the two main challenges are: one, lack of working capital. SCPL is currently grappling with a severe shortage of working capital, which is attributable to several factors. One, delayed payment from customers. Both domestic and international clients often delay their payments, which places significant strain on the company's cash flow. To high interest rates. Borrowing costs in Nigeria are high, making it challenging for SCPL to secure loans for working capital on reasonable terms. Three, outdated plans. The processing plant is obsolete and frequently breaks down, resulting in inefficiency and lower product quality. This has also affected the accountability of SCPL products in international markets.
Okay.
Then there's inefficient inventory management.
Okay.
Excessive inventory levels have tied up capital that could be used more productively elsewhere. Then there's poor financial planning. Inadequate financial planning and budgeting has exacerbated cash flows issues and led to excessive borrowing. That's the challenges. Then there's these
So you now
challenges.
told us that these challenges have resulted in a number of adverse consequences. What are the adverse consequences? Number one, inability to purchase sufficient quantities of raw cocoa beans because they do not have cash. If there's no working capital, that means cash will be constrained. So it affected them to buy sufficient quantity of what they need, leading to underutilization of processing plants. So they have a plant, but they are underutilizing it. The plant is not producing at an 100% capacity. So number two is that delayed payments to suppliers. If they do not sell, or let's say if they sold and customers are not paying them on time, how do they pay suppliers? It's a cycle. And that has damaged the relationships with the cocoa farmers and other partners. And the third consequence that the working capital challenge has had on the company is operational inefficiency. In the sense that this was caused by insufficient funds for maintenance and repairs, resulting in plant breakdowns and reduced efficiency. There is no working capital, adequate working capital. How would they be able to meet up with the day-to-day activity or running of day-to-day expenses? Okay, so that's the first challenge. The second challenge you can read.
International rejection of products. The company is also contending with rejections of its product in international markets, primarily due to poor quality control. Inconsistent quality control has led to contamination and failure to comply with international standards, such as the European Union regulations on pesticides residue. Two, lack of certification. The absence of certifications like UTZ, Rainforest Alliance, or Fair Trade has restricted access to premium market. Inadequate packaging. The packaging currently used by SCPL is not robust enough for long distance shipping and does not sufficiently protect the product. Lack of market research. Inefficient research has resulted in poor understanding of customer references and quality expectations abroad. industry risks. International organizations perceive that industry players in Nigeria adopt unethical practices. To continue.
Okay, let me take that.
Okay.
So thank you.
Thank you, sir.
So the second challenge, major challenge, is the fact that the products of SCPL are rejected internationally. So they export to some other countries, their products are rejected from the point of the airport. From the airport, they will get it back. Why? Because they do not meet the quality standards. And the reason why these products are not meeting the international quality standard is the quality control. See, internal control, let's say quality control of products is very, very important. SPL is lacking in this regard. There's no certification that will certify that their products are acceptable internationally. They do not have it. Inadequate packaging. The packaging is not good enough, in the sense that you are exporting to another country. You have to give it a good packaging that it will last for long, because these goods are going to stay on the sea for days, for weeks, sometimes for months before it gets there. So that packaging should be in a way that it will protect the products that are inside those packages. Lack of market research, industry risk. So the repercussions for these issues are that they have lost export markets due to repeated product rejections. Export markets for cocoa is very, very significant, because it is an international cash crop. So if your products are rejected internationally, then you will lose that market. Number two is that the brand reputation is being damaged because of the negative publicity about the product's quality, and increased costs associated with the storage, handling, and disposal of rejected products. The good thing when you produce is to sell that product that you have done or that you have produced. So the moment you produce and it's spoiled or it's damaged, it will cost you more to dispose of those damages. So now, what is the way forward in all this? Strategic direction. The reason why I said we should take time to read this particular exhibit is because it will lead us. It is leading us to some of the information we are going to be having in the unseen. Right? So, as you all know, that the preseen is not entirely useless, and also the unseen is not to be used singularly. Everything needs to be, both the material, both the information has to be used in conjunction with one another. So strategic direction, the way forward. To address these challenges and restore profitability, SPL Sport has adopted a comprehensive strategy focused on resolving financial constraints, enhancing product quality, and expanding market reach. The key components of this strategy are: number one, financial restructuring and working capital management. They want to restructure their financing. By the time you get to look at their financials now, you will see the reason why they need financial restructuring and working capital management. Working capital management is work. It's not doing well. They are not managing it properly. How do they do this? These are the points. They have to engage with creditors to restructure existing debts, which may involve extending repayment periods or negotiating lower interest rates. Number two is that they can seek equity investment from private equity firms, venture capitalists, or strategic partners to inject new working capital into the business. They can adopt a JIT, just-in-time inventory management system, to minimize capital tied up in inventory. The products you are buying, you are storing in your warehouse that you are not using in production, or the ones you are producing and you're not selling, it's tying down your capital and it may get damaged. So thereby leading to additional costs for you. So next point is to develop a detailed financial plan and budget. They strong focus on cash flow forecasting and cost control. And the last but not least, under the first strategy, which is the financial restructuring and working capital management, is to what? to investigate and apply for government grants and incentives available to agro-processing companies. Nigeria is big on giving many incentives to agricultural companies. So those incentives are available. So, and that is why the use of consulting firms most of the times for services like this is very important, because they have this information. They consult for different industries and for different companies. They would know some of the incentives that are available for your industry. Okay, that's number one. So number two strategy is quality improvement and certification. This is very, very important. We do not even need to read much on it. So the company has to work on quality, because if quality is fine, their products will not be rejected internationally. Then in working on that quality, some things has to be implemented, a robust quality management system, QMS, and to invest in up-to-date quality control equipment, to obtain relevant certifications like UTS, Rainforest Alliances, and the likes. So that's about that strategy. And the third strategy is the backward integration. Backward integration in the sense that they have to acquire or lease cocoa farms. So when you integrate backwardly, what it means is that you are having an alliance or a partnership, or maybe you are even acquiring your raw materials producer. That's what backward integration means. The first integration means maybe you are acquiring maybe your wholesaler or people that consumes your good. That's forward integration. Backward integration means that you are looking at backward. But before the product gets to you, it is coming from some persons. So have a good relationship with those organizations. So considering acquiring or leasing cocoa farms to ensure stable supply of high quality cocoa beans and lessen dependency on external suppliers. This approach will require substantial capital investment and management expertise. That's the third strategy. Then the fourth strategy is strategic alliances. So what this one is talking about is that SCPL intends to pursue strategic alliances with global chocolate and cocoa-based consumer goods manufacturers. Such partnerships are expected to be mutually beneficial. It's beneficial to Sudeco, and it's also beneficial to the partners that they're having that alliance with. Number one, or let's say A here, is international partner contribution. It will help them that they would be able to supply modern cocoa products. And also, they will be able to supply modern chocolate manufacturing machinery. The second one is that SCPL contribution. SCPL will contribute to access raw cocoa supply chains within Nigeria, estate processing facilities and workforce, and establish local knowledge and government relationship. So all these are going to have a serious and good advantage. So those are the strategies. And we look at the risk and mitigation strategies. So they need to look at some risks that needs to be reduced. Number one is the policy inconsistency in Nigeria. It's a risk and has to be mitigated. Quality control lapses is a risk internally, and it has to be managed. Currency volatility, because they buy internationally. So that volatility of currency when Naira depreciates is a risk, and it has to be managed and controlled. Cultural or operational differences is also a risk. And this one is a risk in the sense that they want to align internationally. They are looking towards international alliance with some companies. So there will be some operational differences. The way we are doing our things in Nigeria, it may not be applicable to other countries because of these differences. So that's about exhibit 4. It's very, very important. The reason why I've taken my time in that exhibit is because it will be very, very important, and it is very dependent on some of the things we are going to be reading in the unseen. Whether the one we suggested here or the one your examiner is given to. Exhibit 4 is very, very important. is leading us. So exhibit 5 is talking about financials. If you look at the financials, right? If you look at the non-current assets is reducing, the inventory is reducing, the trade and other receivable has reduced, the prepayment, okay, that one is not even a challenge, it's increased. Fixed deposit investments, that did not really move significantly. If you look at your cash, it has reduced significantly. Then we move to share capital, deposit for shares, retained earnings. So what is very, very important to note here is the retained earnings. They do not even have retained earnings. What they have is what? Is retained loss. Accumulated loss. In 2022, it was 755 million loss. Accumulated retained earnings. And in 2023, they have accumulated a loss of 816.9 million naira. This is a very, very bad situation for the company. And that has affected their equity to reduce to what number? The equity is standing at 50 million naira. A company, a full-fledged company, is having an equity of 50 million naira. Why? Because they are not making profit for years. They have accumulated losses. So if you look at the liability as well, is there anything that needs to be called out here? Okay, it is trade and other payables. Trade and other payables has increased. If you look at it here, it has increased significantly by almost 100 million naira. So meaning that they are not paying their suppliers. And okay, borrowing has reduced. That one is even good. So if you look at the okay, that's about liability. So I don't think they really okay, we've looked at the non-current liability and the liability. Then look at the income statement summary. So if you look at the income statement summary, you realize that the revenue is reducing. In 2022, it was 217 million naira. Now it has reduced to 161 million naira in 2023. So they are not doing well in terms of revenue generation. So anything that affects revenue will affect cost of sales because they move hand in hand, right? So then other income, they really did not have much other income. Send and distribution costs, general admin costs, then impairments, and we are also having operating loss. From the point of operation, the company is reporting loss. 36 million naira operating loss in 2022. And in 2023, it has increased. And if operating loss has increased, it does not even concern the fact that you have to pay finance costs, that's interest. So then you remove interest, you had the few finance income they have, you are going to be having loss before tax of 61.7 million naira for 2023. So the loss for the year 61 and 60, 2023, 2022. So the company is doing badly. So and that is why exhibit 4 is very, very important. So that is why if you look at the financials and you know how to read financials, you would understand. And that is why a subject like this is very important. That's why you are doing case study in ICANN. Right? When you pick a company's financial statement, you can easily say what is going on in that particular company from their numbers. So, but thank God, our examiner, through the help of exhibit 4, has told us how the company is performing, how they are doing, and more importantly, their current situation in the markets. Okay, so that's about the Preseen. So, like I mentioned, I sent the unseen in the group. So, and the expectation is that you guys should have gone through it because the Preseen is not a complete case. A complete case scenario, we are having an incomplete. Someone is saying they can't see. Please, costs. Is the usual from the person or from me?
We can see clearly from you. It's from the person.
Okay, so Delivery is from the person. Please, you can drop a chat for the person that he can drop off and join back. Okay, some persons are saying, so let me stop sharing and share then. So please, co-host, each time they are dropping a chat in the chat box, just call my attention to it. It's something that we can really turn around. Yes, go down. Okay, so those people that said they can't see, can you confirm whether you can see it now? Those people that are saying they can't see the screen, can they confirm whether they can see it now? Just use the chat box. Okay, so everyone is fine now. Please, David and Fumi, perhaps maybe you might want to log out and log in back. Yes, thank you. Let's move on. We really need to move fast. So now, on seeing material, like you can see, this is for study purpose only, for case study percent class. So this is not what we are expecting in your examination hall. We are just using this for study, so that it will give you a glimpse of where your examiner is going to. It will direct you, right? So let's look at the exhibits in the unseen. List of exhibits. The following exhibits are newly provided and did not form part of the material provided as Preseen. Number 1, exhibit 6, email from Thomas Chukwuemeka. This next one is exhibit 7, email from Johnson Eze. Exhibit 8, magazine article, why African and Nigerian cocoa products are rejected in Europe and other international markets. Exhibit 9, proposal from international strategic partner. Exhibit 10, proposal from Okiogun, Cocoa Farmers Cooperative Society Limited. Exhibit 11, capital reconstruction plan, or capital reconstruction plan. So now let's take exhibit 6. But before I take exhibit 6, I want to make this statement. It's very important. So guys, please take note of this. If you want to write it down, write it down. The first thing you need to look out for by the time you get your answer booklets, your question paper rather, by the time you get your question paper in the examination hall, the question paper will contain both the Preseen and the unseen. The first thing you need to look out for is the first exhibit in the unseen. In this case, exhibit 6. That should be the first thing you look out for. And why should this be the first thing you should look out for? Why? Is there anyone who can tell us why? Can use the chat box if you want to drop it. The co-host, do you want to help us? Why should it be the first exhibit we should look out for once we get our question paper? Why should this be?
Because I think that's where your requirement for the exam is.
That is where our requirements are. Thank you so much. Thank you so much. That is where our requirements are. So it should be the first thing you should look out for. I hope it's clear now. Exhibit 6 is the most important exhibit in the whole of the case scenario, both Preseen and the unseen. Why? Because that is where our requirements are. And your requirement is what is leading you. You should not do anything outside the requirements. On no account should you do anything outside the requirements. It's very, very important. Now, let's read exhibit 6. Who is reading for us? Judith, read for us.
Exhibit 6, email from Thomas Chukwuma, FCA to Tokumbo Adeolu. From Thomas Chukwuemeka to Tokumbo Adeolu. Date, May 4th, 2026. Subject, SCPL's financial position. Dear Tokumbo, I have received an email from Johnson Eze, Executive Director, Finance and Strategy of Sadeco Cocoa Processing Limited, requesting our firm's professional assistance in reviewing the company's worsening financial position, and advising on appropriate remedial actions. As you are aware, SCPL is a medium-sized cocoa processing company established in Ondo State with installed annual processing capacity of about 10,000 metric tons of cocoa beans, producing cocoa butter, cocoa cake, and cocoa powder for both domestic and export markets. However, the company has faced serious operational and financial difficulties in recent years, including lack of working capital, underutilization of processing capacity, delayed payments to suppliers, outdated plants, inefficient inventory management, poor cash flow planning, and rejection of products in international markets. Sir, please scroll up.
Okay. Okay, I'm scrolling. Okay, you can go on.
Johnson's email refers specifically to the board's strategic direction, which includes financial restructuring and working capital management, quality improvement and certification, backward integration, strategic alliances, and risk mitigation measures. These matters are set out in the documents I have attached to this email and will form the basis of the assignment we are to undertake for SPL. I would like you to carry out a detailed and critical analysis of the issues raised and prepare a professional report for my review before submission to the board of SPL. This report should comprise, please scroll up.
This report should comprise. That is a very, very important preface to our requirements. Oh yeah, read the requirements for us.
1. An evaluation of SCPL's financial statements for 2022 and 2023. You should analyze the company's profitability, liquidity, working capital position, gearing and solvency, operating efficiency, and finance cost burden. Your analysis should not merely restate the figures. You should interpret what the figures mean for SCPL survival, liquidity, supplier relationships, debt service capacity, and ability to implement the board strategy. 2. Evaluation of the proposal for strategic...
Before you move to two, can someone tell me, out of the tools for case study analysis, that first one, what is it talking about? What is it talking about? If you had actually joined our classes that we did initially, or you got the notes, that first requirement is talking about what?
Ratio analysis.
Ratio analysis.
We call it ratio analysis. That's not what we call it.
Financial statements analysis.
Financial statements analysis. Thank you so much. Financial statement analysis. So exhibit, requirement 1 is directing you to financial statements analysis. Okay, move on. Exhibit 2, read.
2. Evaluation of the proposal for strategic alliance with Barry Calibert and recommend whether, in view of the financial and non-financial benefits, SCPL should accept the proposal. Note that a key condition set by Barry Calibert is for SCPL to carry out a capital reconstruction based on the assumptions provided in one of the attached documents. You are to explain how this reconstruction will change the company's financial position.
You remember that before you move on, if you take a look at requirements 2, right? Though this is a suggestion, right? This unseen is a suggestion. We are just suggesting it, right? So, but we would not suggest something that is out of the Preseen. So that requirement 2 is pointing out at some of the information we read under which of the exhibits in the Preseen. If you have been following, please use the chat box. Requirements 2 is talking about some of the information we read in which of the exhibits that we have read in the Preseen. Okay, that means people are following. Yes, exhibit 4. Exhibit 4 has so much information, and it is leading us to some things. Some of where it is leading us is what this requirement 2 is talking about. Evaluation of proposal for strategic alliance with Barry, Calibert, and recommend whether in view of the financial and non-financial benefit, SCPL should accept this proposal. Note that a key condition set by Barry Calibert is necessary to carry out a capital reconstruction. This was mentioned. All this information is mentioned in Exhibit 4 in the Preseen. Okay, take the third requirement. Let me hear you.
3. Evaluation of the proposal for backward integration with Oke Ogun Farmers Cooperative Society to determine whether it will contribute positively to SCPL's financial position.
Yes, we also read this, right, in Exhibit 4. That the company is, let me go to I think in one of the strategies, which is backward integration. Where is it here? Okay, this is it. So, and like I mentioned, like I explained earlier, what backward integration means is that when you acquire or you have a strategic alliance with your raw material producer or raw material supplier. So we say you are integrating backwardly. Do you get? Okay. Please finish reading the exhibits so that we can move on.
You should treat these matters carefully and objectively. Our firm must maintain professional independence and avoid being seen as promoting an overly optimistic reconstruction proposal without adequate evidence. Please let me have your draft report by May 8th so that I can review it before our meeting with Johnson Eze and the SCPL board on May 21st, 2026. Regards, Thomas Chukuma, FCA partner, Gaba Chukwemeka Adelani and Co. Chartered accountant.
Okay, thank you so much for that read. So at least we have known our requirements now. We have 3 requirements majorly. One is a financial statement analysis. You need to analyze that company's financial position. Their financial position is in a disarray. They are not doing well at all. Right? So we need to analyze that. So then the second thing is to now evaluate the proposal from an international company that wants to partner with them in terms of production. So, but there is an important condition for this partnership or alliance with them is that they need to reconstruct their capital. So we are going to take a look at that under the second requirement. And the third one is there's a proposal with the Okeogun Farmers Cooperative Society. So, and that proposal, so we are going to read the proposal in those exhibits that should be. But I'm just pointing at you that this is very, very important, and exhibit 6 should be the first thing you should look out for the moment you get your words, your question paper. Okay, let's take exhibit 7. Judith, you can continue, because the reason why exhibit 7 and exhibit 6 used to communicate same information. And if you look at it, you will see that this is an email that is coming from Johnson Eze to Thomas Chukuma. Johnson Eze should be the, let me see his designation. That's the Executive Director, Finance and Strategy. So that's the FD, the Finance Director for Sodeco. So he's sending an email to your partner. So it is on the basis of this exhibit 7 that your own partner is sending an email to you in exhibit 6. Do you understand now? Do you understand? So exhibit 6 and exhibit 7 relates, and we may just end up reading the similar information in both of them, but let's still read it. Go on. That is it.
Exhibit 7. Email from Johnson Eze to Thomas Chukuma. From Johnson Eze to Thomas Chukuma. Date 1st May 2026. Subject: financial situation of SCPL and request for advisory support. Dear Mr. Chukuma, I trust this message finds you well. Following recent deliberations by the board of SPL, particularly with respect to the strategic direction proposed to reverse the negative position of the company, I am writing to formally request the assistance of your firm in addressing a number of critical financial and strategic challenges currently facing the company. As you will note from the accompanying documents, HCPL is undergoing a period of financial strain combined with significant operational and strategic transition. While the board has approved, sorry, yeah,
Continue.
I think you've passed where I'm reading.
No, I didn't pass there. That's the second paragraph.
Okay. As you will note from the accompanying document, SCPL is undergoing a period of financial strain combined with significant operational and strategic transition. While the board has approved a forward-looking strategy aimed at repositioning the company for suitable growth and improved shareholder value, execution risks remain high as potential investors and debt providers have demanded to see our performance position before they can make any decision. Accordingly, we require independent professional support to critically evaluate our position and guide implementation. We would appreciate your firm's assistance across the following three key components.
Okay. 1.
1. Financial performance review and diagnostic assessment. We request a detailed review of SCPL's recent financial performance, focusing on profitability, liquidity, and solvency. 2. Evaluation of strategic direction and financial implications. The board's strategic direction involves a proposal for backward integration, capital injection from strategic investors, and strategic alliance with a reputable chocolate brand. We therefore request you to conduct a capital reconstruction scheme, assess the financial viability of the proposed strategies, identify the funding requirements and implications for capital structure, evaluate whether the strategic initiatives align with SCPL's current financial capacity, highlight any potential risk or unrealistic assumptions embedded within the strategy. We would appreciate a comprehensive report that integrates your findings across the above areas and provides practical, actionable recommendations. Given the urgency of our situation, we will be grateful if this engagement could commence immediately in order for the report to be considered by the board at its meeting coming up in 2 weeks. Kindly indicate your availability and proposed approach, including timelines and engagement terms. We look forward to your expert guidance in helping SPL navigate this critical phase and reposition the company for long-term success. Thank you for your anticipated cooperation. Yours sincerely, Johnson Eze, Executive Director, Finance and Strategy, SCPL.
Thank you so much, Douglas. So, like you would realize, you would agree with me that the same information we've read in Exhibit 6 is what we are read in Exhibit 7. So it's just so stating. So this one has moved from the company to your partner, then your partner is relaying what you should do to you. So it is important that you read it, right? But if I were you, once I read Exhibit 6, I will just scan through Exhibit 7 and move on. If there is Exhibit 7 is talking about an email that is moving from one of Sodeco's officer to your partner. So that you save your time in reading. Okay. Let's move on to Exhibit 8. Exhibit 8 is talking about article on why African and Nigerian cocoa products are rejected in Europe and other international markets. A special report for Cocoa Industry Review magazine by Editorial Research Desk. This particular article that we have here is a real article. It's not a fiction. It's an article that exists. If you look online, if you search ERD, this Editorial Research Desk, you would come across it, right? So we have just called this out here. So for our knowledge sake, and for you to know that, see, all these case study examinations that you are seeing, these business scenarios are real life scenarios. What I can just do is that they will just look for a company and adopt their financial or their business scenario for us. You understand? That's what I can do. Okay. Who is going to read for us this exhibit 8? I think we should allow the
Okay.
man to read, Mr. Adebayo.
Okay, sir. Right, sir. Okay, Exhibit 8.
So, please, before you read, see, guys, I don't know. You guys would read in the case study examination. You do not let reading bore you. You have to read. That's why they gave you 1 hour for reading. The only thing that is different is that you have to read as fast as possible. So all these cases, all these things we are reading, you would agree with me that they make sense. They literally make sense. And they are relatable. They are very, very relatable. So they are information that we need to read and understand and digest for us to be able to provide an important, or let's say a good report or a good answer. So fine, the scenario might be different from what your examiner will bring, but it will not be far different, right? It will be very close by. So let's read Exhibit 8.
Okay, Exhibit 8. Article on why African and Nigeria cocoa products are rejected in Europe and other international markets. A special report for Cocoa Industry Review magazine by the Editorial Research Work Desk. The new compliance reality. Africa remains central to global cocoa supply, but international buyers now demand more than volume and price. Cocoa products entering Europe and other premium markets must meet strict requirements on food safety, traceability, sustainability, packaging, and documentation. The EU's Rapid Alert System for Food and Feed, RASFF, enables authorities to act quickly where imported food presents health risk, including through border rejection, withdrawal, or recall. For Africa and Nigeria exporters, this means products are judged across the full value chain, from farm, chemical, use and drying practices to processing hygiene, laboratory testing, certification, and report documentation. Europe cocoa sector guidance also stresses that cocoa beans and cocoa products must be safe to eat and compliant with European legislation and international food safety standards. Main reason for rejection. 1. Excess pesticide residues. A major cause of rejection is pesticide residue allow EU maximum residue limits, MRLs. The European Commission defines MRLs as the highest pesticide residue level legally tolerated in food or feed when pesticides are properly applied. Under Regulation EC 396/2005, strict limits apply with a default of 0.010 mg/kg, where no specific MRL exists. Risks are from misuse of pesticides or use of banned substances. 2. Cadmium and other heavy metals. Cadmium is a toxic heavy metal.
Cadmium.
Okay, cadmium is a toxic heavy metal that can be absorbed by cocoa trees from soil. The European Commission notes that cadmium can accumulate in the body and may harm the kidneys, lungs, and bones. It is also classified as a human carcinogen. The EU set limit, e.g. 0.60 milligram per kg for cocoa powder. Although applied to finished products, risk must be managed from the farm level through testing and supply control. 3. Mud, mycotoxins, and poor drying. Poor fermentation, inadequate drying, and humid storage can lead to mold and mycotoxin contamination. European food safety rules cover contaminants such as mycotoxins, while cocoa sector guidance highlights the need to control risk arising from production, transport, and warehousing. Ochratoxin.
You can see that. Move to 4.
Okay, 4. Microbiological contamination. Cocoa products may be rejected where contamination such as Salmonella is detected. RSFF is designed to communicate food safety risk, including microbiological hazards, across EU food safety authorities. Although roasting reduces till 5.
Yes.
Although roasting reduces microbial risk, contamination may occur after roasting through pure hygiene, weak segregation of raw and processed materials, poor pest control, inadequate cleaning, or unsuitable packaging.
Okay, Mr. Kayode, thank you. I think in order for us to move faster, we may not necessarily need to read all the points because we have up to 8 there. So what this exhibit is just talking about is an article that is highlighting the reasons why Nigerian or African products, cocoa products, are rejected in the international markets. And because the matter is affecting Sodeco, so that is why we are highlighting it. So the most important thing here is what exporters should do in order to avert these sad experiences. African and Nigerian cocoa manufacturers should implement approved supplier systems, farmer training, for shipment testing, batch traceability, export grade packaging, and documented food safety controls. They should also invest in certification readiness, farm mapping, and reliable export documentation. So in conclusion, African cocoa remains vital to the world market, but Europe and other premium markets increasingly reward compliance. They do not joke with compliance. Even in Nigeria here that people consume substandard products, and we see expired products in the markets. In the international markets, most especially in the Europe, they do not joke with the rates. So not just supply, you don't just supply anything. Compliance is very, very important. Exporters that invest in testing, traceability, certification, packaging, and some supplier quality systems will be better positioned to retain access to high value market. Those that do not may face rejection, price discounts, delayed payments, and loss of customer confidence. Okay. That's about that exhibit. Just to keep you informed about what is happening in the industry. That's why we got that. So this exhibit 9 and exhibits 10 and 11 are important to us, most especially for our requirements 2 and 3. So let's read this. Martina, who was the person that read for us?
Yes, sir.
Oh yeah, let's read this.
Exhibit
9.
Okay. Following preliminary discussions with, you have to remove your cursor. It's blocking it.
Also, okay.
Okay, following preliminary discussions with SCPL management, Barry Barry Callebaut International is pleased to submit this indicative proposal for a strategic alliance with Sadeco Cocoa Processing Limited. Barry Callebaut is a global cocoa and chocolate product manufacturer with extensive technical, commercial, and sustainability experience in cocoa processing. The group reported sales revenue of 4.8 billion sales volume of 1.1 million tons, 62 factories worldwide, and business activities over 40 countries in its 2022-2023 annual reporting. We understand that XCPL has installed capacity of about 10,000 metric tons per annum, but is operating significantly below capacity due to working capital constraints, obsolete equipment, product quality issues, weak certification status, and rejection for some of the export products. Screw up.
Okay.
Subject to satisfactory due diligence and agreement of detailed terms, Barry Callebaut proposed the following support package: area of support, proposed contribution, and then purpose. Working
Okay, so
capital.
we may not necessarily have to read all of this, right? So let me just give a background to what this SBT is talking about. An international cocoa producer, so which is PCI, Barry Callebaut International, is planning to have a strategic alliance with Sudeco. And because the reason why they are doing this, because they understand that SCPL is has a huge production capacity, but they are underutilizing it. So, and the reason why is because of some obsolescence in their production, and then their low quality issues, and then some working capital issues that they are experiencing. So this is one of the reasons why they are not producing at full capacity, and they are offering the following supports. So they are offering to support in the area of working capital facility with 400 million naira, and then this money will be used to purchase cocoa beans and also be used to produce key inputs. And the next area of support that they are trying to offer is in the area of machinery and plant operation supports, because the plants they currently use, yes, it can produce in high capacity, but it is becoming obsolete. So they have to upgrade it to an international standard. And for that, they are offering to help with a contribution of 150 million naira in that regard. So the next area of support they are trying to help in is the area of quality control and lab supports with a 150 million naira contribution. So they are also trying to help in the area of certification and sustainability program with a 100 million naira contribution. So they are also trying to help in the area of product development and market access support with a contribution of 70 million naira. And last but not least is that they are trying to help in the area of management system support, which will they will be able to use that to salvage their internal control systems. And that's they are proposing a contribution of 65 million naira. So in total, so they are proposing a 1.23 billion naira in support. Okay, so there's a term for this particular support they are trying to offer. It said the proposed working capital facility will be available for 18 months and will be restricted to approve cocoa beans purchased and production inputs. Drawdowns will be based on monthly procurement plans approved by a joint steering committee. So BCI is also willing to enter into a non-exclusive off-take arrangements for selected SCPL products, provided these products meet agreed policy specifications. Indicative off-take volumes are as follows. For products, we have 3 products, year 1, year 2, and we have the volume. MT is the volume that they are using to measure the tons of cocoa. So they are proposing this in terms of volume for year 1 and year 2. Pricing will be based on international cocoa products benchmark, adjusted for quality, logistics, and Nigerian origin factors. Currently, a metric ton, which is the MT, a metric ton of cocoa liquor is selling for 500 USD. That's per metric. Cocoa butter is selling for 200 USD, and a cocoa cake or powder is selling for 300 USD. We are glad to consummate this transaction at an exchange rate of 250 naira per dollar. Okay. Okay. So let me see this particular paragraph. Five callers will provide technical support to help SPR reduce planned downtime. That one is something that we have also known. So let's move to expected financial benefit to SCPL. Improved working capital, we've read that. Higher capacity utilization, we've also read that. And revenue goods, we've read that. Improved gross margin, yes. If you sell better, the gross margin will improve. Reduce product rejection cost, yes. If the quality control of the if the quality of the products is being controlled, then there will be less rejection from international markets. Better cash flow predictability, lower financing pressure, improved enterprise value. If the first 18 months are successful, Barry callouts may consider a further equity investment of up to 300 million naira in SCPL. That's for equity, it's not for working capital. So, and that is if the first 18 months of providing working capital support by BCI is successful, they would provide additional 300 million naira for capital. So that one is conditional, right? So let's move on. So the proposal is subjected to 1, completion of financial cost of capital at 27%, legal and operational due diligence, export reports, evidence of capital restructuring. It's very, very important. Regularization of SCPS existing deposit of shares, regular review of outstanding tax, statutory and supplier liabilities, appointment of qualified head of quality and food safety. It's very, very important. Then lastly, implementation of monthly management accounts and cash flow reporting. So we believe that SCPL has potential to become reliable Nigerian cocoa processing partner if its financial, operational, and quality challenges are addressed urgently. We look forward to discussions with the board. Just faithfully, Marcia Stella, Regional Director, Africa Sahel Partnerships, Paris, Calabout International, AG. So that's about Exhibit 9. It's talking about the international alliance with another company. Okay. So then the following exhibit is Exhibit 10. Exhibit 10 is a proposal, another proposal, and this one is not international. It's a proposal with a proposal from Okeogun, Cocoa Farmers Cooperative Society Limited, with an SCPL. Judith, can you read this for us? Is Judith still on call? Oh, I think she left. Okay, Martina, please go on.
Okay, sir. Following discussions on strengthening raw material security and reducing reliance on external supplies, We are pleased to submit this proposal for a backward integration arrangement between SCPL and Okere Ogun Cocoa Farmers Cooperative Society.
Okay, Ogun.
Okay, Ogun. Okay. Structure of the arrangement. Screw up.
Okay.
The type lease and production partnership. Duration 5 years with options for renew after 3 years. Location Okeogun Agricultural Belt, Ondo State. Land under lease 1.2 hectares of cocoa farmland. Ownership land remains under the cooperative ownership. SCPL obtains economic production rights. Under this arrangement, SCPL will finance production and modernization, while the cooperative provides land, labor, and farming experiences. Physical resources to be provided. Revenue.
We have farmland, we have cocoa trees, we have labor supply rights, we have storage facilities and what? And access roads. So move to 3.
Capital investment required by SCPL. Investment area, amount, purpose. Farm rehabilitation.
The total will be what? The total will be what? The total will be what?
950 million naira.
So that's the capital outlay that they are going to be needing for this particular investment, or for the particular proposal that they are entering into. Okay, let's move on. Technical expertise requirements.
SPL is expected to provide agronomy specialists for cocoa farm management, pest control specialists to manage pesticide compliance, quality control officer to supervise fermentation and drying, sustainability expert to support certification and traceability, financial manager for budgeting and cost monitoring. The cooperative will provide local farming expert, labor mobilization,
local farming expertise, labor mobilization, and traditional knowledge of soil and climatic pattern. So what this is saying, like this thing that we are just reading, is a good example of what we know as a contract of service, right? If you are familiar with this, maybe in your respective work, there is a contract between yourself and maybe a client, or maybe a customer, or maybe a supplier. So there is what we call a contract of that maybe service, or a contract of supply. So information like this will be there that you have to make sure you go through it painstakingly so that you do not miss some important thing and note some important information before it is being finalized. Companies, most especially big companies that are structured, would have things like this. This contract, contract of an agreement like this be reviewed by legal practitioners, by lawyers, maybe in the firm, or if maybe they outsource their law service, they would have their company secretary or someone who offers legal advice to them to go through this, so that they will not be in a very unfortunate situation as time goes on. So all these things are relatable, you understand. The fourth one is talking about technical expertise. We've read this. 5 is talking about production and supply terms. For year 1, for year 2, and for year 3 to 5, the cocoa yield in tons, 500, 700, and the percentages supplied to SCPL, 80%, 85%, and 90%. Price mechanism below open market price by 10%, guaranteed buyer allowance. So forest and financial inflows, forecasts, financial inflows to SCPL. Assumption, it is assumed that average cocoa selling price will be sold for 2 million naira per MT. And the contribution margin for this will be 25%. Non-financial benefits. And these are non-financial benefits: secure high quality cocoa beans, So all the points are not financial benefits. You have key conditions of their arrangements. This key condition is very, very important, and I'm going to take them. SCPL must provide quarterly financial and operational reports to the cooperative. They should cooperate. The cooperative must ensure compliance with agreed quality standards. It's very, very important. Both parties must adopt a sustainability and ethical sourcing framework. It's very, very important. Independent audits of production and payments annually. So all these are the conditions. Yours faithfully, Adewale Ogunleye for Okeogun, Cocoa Farmers Cooperative Society. The last exhibit here, exhibit 11, is talking about the capital restructuring assumptions. So as you can see, in response to the request by Barry PCI, the Finance and Strategy Department have come up with what? With the following assumption, believing that SCPS financial position will change positively once they are implemented. And the 2024 performance financial statement of the performance statement of financial position is prepared. 1. Equity restructuring. Fresh equity injection. Investors inject 150 million cash to improve liquidity, debt to equity conversion, convert 120 million existing liability into equity. B, debt restructuring. We restructure short-term borrowings, 37.8 million naira, converted towards to long-term debt. Settlement of payables, 200 million naira paid off using proceeds from asset disposal and working capital release. Asset restructuring assumption. So we are going to have a disposal of obsolete PPE, which are underutilized. You understand? Which are underutilized, and inventory rationalization using time, receivable improvements, which is to improve collection, receivable increases slightly to 20 million naira. So in all of this restructuring that we've had here, you would see that there is a financial number that's attached to it. So we have come to the end of the unseen information. So the reading is very, very important. It's important to understand those things that your examiner is talking about. Someone is saying no voice. Is it the person? Posts. Is it from the person or is general?
We can hear you, sir.
We can hear you.
I'm coming. Okay, let's continue. So we are done with reading of the question, with reading of the case scenario. So where we are moving to now, we are moving to solving the questions. We are moving to solving the questions. Okay. So let me remind us of our formats for case study reports. I'm going to be sharing the reports now for us to look at. So not only the reports, we'll also be sharing the appendices, right? So that okay. Yeah, someone is saying screen. I stopped sharing. Okay. Can you see now? Can you confirm that you can see my screen now?
Yes, we can.
Yes.
Okay.
The screen is shown.
Okay, so this is what your case study reports will look like. The first is your cover page. And what your examiner requires is that the first page 1 of your answer sheets should be your cover page. What are the information you are going to have in your cover page? You are going to be having, this is an external report, just design a header, like a letterhead kind of information for the consultant, the consulting firm you are working with. You are working with a consulting firm, and that firm is Garba Chukwemeka Adelani and Co. Chartered Accountants. Address 60 Olanshile Street, Sule, Lagos. Telephone number, so, and then email address is this. So to Board of Directors of Sadeco Cocoa Processing Limited, subject an evaluation of the financial performance, strategic alliance, capital reconstruction, and backward integration assessment of Sadeco Cocoa Processing Limited. With these subjects, you have brought in all the requirements that you are asked to do in Exhibit 6. Prepared by Garba Chukwemeka Adelani and Co. Chartered Accountants. Then dates 8th May 2026. The report is prepared. This one is the disclaimer, it's very important. The report is prepared for Sadeco Cocoa Processing Limited, our client, and it is intended for its use. We will accept no liabilities from any third party who may place reliance on the contents of this report without due authorization. So you see this first page 1 that you have just done. This first page, this cover page is 5 marks, and it should be very, very, very unusual, or let me say strategic enough for you to miss this, right? Because this one does not require any computation. It's just something that you should be able to write within 3 to 5 minutes. It does not take time. The moment you identify your requirements, you should be able to perfect the cover page. You should be able to perfect the cover page. So then that's the cover page. According to your case study report format, what should follow your cover page is the executive summary. What should follow your cover page is the executive summary. However, the executive summary, as the name implies, is a summary of your report. So you do not have that information yet. So what should you do is to leave page 2 and 3 blank for that purpose and move to what? And move to introduction. Open page 4 for introduction and start your introduction. So what are the information you need to bring out in your introduction, or you need to actually write or provide in your introduction? It's simple. You are introducing what you want to do. It's very, very simple. Your requirements, what you're asked to do, the tools that you have carried out to do it, to have used to carry it out. What else? A brief history about your clients, their current challenges, why it is necessary that they do this particular analysis or services that you are carrying out for them. So that's what introduction is talking about. But we need to read it so that we can digest that. So is there anyone who wants to read for us? Is Martina still with us? Please read this introduction for us. Let everybody read.
Okay. Sorry, let me zoom it out.
Okay, I can zoom it out. So are you using phone?
No, I'm using my laptop. Okay,
Then
I can see now. Sequel to the email received from Sadeco Cocoa Processing Limited, dated 1st May 2026, and the subsequent engagement initiated by the Executive Director, Mr. Johnson Eze, our firm, Garaba Chukwemeka Adelani and Co. Chartered Accountant, has been engaged to carry out a comprehensive review of the company's financial and strategic position. Specifically, we have been requested, remove your, awesome. There's something blocking the screen. Specifically, we've been requested to undertake a detailed evaluation of SCPL financial statement for the 2022-2023 financial years, with a view of assessing its profitability, liquidity, working capital management, solvency, and overall financial performance. In addition, we are to critically assess key strategic initiatives proposed by the board, including the proposed strategic alliance with Berry Colabert International and the backward integration arrangement with Okeogun Cocoa Farmers Cooperative Society, and advise on their financial and operational implications. SCPL is a medium-sized cocoa processing company based in Ogun State with an installed processing capacity of approximately 10,000 metric tons of cocoa beans annually. The company produces cocoa, butter, cocoa cake, and cocoa powder for both domestic and export markets. However, in recent years, the company has experienced significant financial and operational challenge, including inadequate working capital, underutilization of capacity, inefficient inventory management, outdated processing equipment, and rejection of products in international markets due to quality and compliance issues. These challenges have adversely affected SCPL financial performance and market competitiveness, necessitating urgent restructuring and strategic positioning initiative by the board. The proposed strategies are aimed at improving liquidity, enhancing product quality, securing raw material supply, strengthening operational efficiency, and restoring high-term productivity. In carrying out this assignment, we have carefully reviewed the attached exhibits and supporting documents, conducted detailed financial and strategic analysis, and evaluated the feasibility of the proposed initiative using appropriate analytical framework and professional judgment. Our findings are presented under the relevant headings and subheadings, leading to well-reasoned conclusions, practical recommendations to guide the board's decision-making process.
Okay, thank you.
Thank you, sir.
So you would agree with me that this introduction is written in a very clear manner. So if I were you, I will master this particular style for introduction. After your cover page, another free mark that you will just secure in this particular case study exam is your introduction. It's simple. The only information you need for your introduction is the information you would have in your exhibit 6 and exhibit 4. Those are the only information you need for your introduction. And you would see from what we have actually done here, the first paragraph is talking about what you are asked to do in exhibit 6, right? The second paragraph is talking about yes, it's still talking about exhibit 6, your requirements. Third paragraph is talking about some information from exhibit 4 about the company itself. So same thing with the fourth paragraph. So fifth paragraph is just telling us what you want to do, the outline, and how you are going to go about it. So it's very, very simple in that manner. So that should take maybe the whole of page 4. Sometimes misleads maybe to some lines in page 5. Your introduction, please keep it simple. Keep it simple. If we are going to provide the solution, we make it available to you people. You are going to have it. So once you have it, what you should do, is to do what? Carry your Bible and your book and start writing. Don't read it. Don't just read. Write it out. Solve. Do you understand? This introduction, if you think that it is too long for your own, try and even summarize it in your own way, something that you can master and understand and be able to put down. under examination condition in the examination hall. Do you understand? So that's about introduction. The next thing that you follow your introduction is the main analysis, the main reports. And that one, you are going to pick it requirement by requirement. Start with the first requirement. You do the main body, the main analysis, you conclude, and you recommend. Then you take the second requirement. You conclude and you recommend. You take the third requirement. You do what? You conclude and you recommend. So it is from this body of the reports that you now start to do some financials, some calculation. Do you understand? So that is when we will now have to take a look at our appendices. Can you guys see my appendices? Is it showing? Or is still the report that is showing? Please
Yes,
confirm.
it is showing.
Ratio analysis. Can you see ratio analysis, right?
Yes, we can. A ratio
Okay.
analysis with
Ratio analysis. So the reason why we are using ratio here is because, fine, your examiner may not be specific. If your examiner is not specific, you are at a liberty to either use ratio or a combination of ratio and trend, right? Use ratio or a combination of ratio and trend. So I'm going to be using ratio because trend analysis does not really work here. Why? Because the company is just in a very, very distressed situation. Their revenue is reducing, they're having loss, the loss is increasing. So we can see that. So without even calculating the trend, you could see that the numbers are moving in a negative way, in a negative direction. So let's use, if you look at ratio, yes, we can categorize those ratios in our normal profitability, liquidity, solvency categorization, and maybe do maybe maximum of 3 ratios under each category. So you would see what I'm showing. We picked profitability ratios and we looked at gross margin. And in this situation, we realize that for both years, the company is having a negative gross margin. -14 for 2023, minus 8.9% in 2022. Why? Because they are having a gross loss instead of a gross profit. Do you understand? Same thing with operating profit margin. There's no profit, so and that is why the numbers are in negative. So net profit margin as well is having a similar situation. So all the profitability numbers are in negative. So meaning that the company is in a very difficult financial situation and it needs urgent attention. So time will not permit us to be picking those numbers one after another. We are just going back to how ratios have been done. So you should understand that, and the fact that you are going to be provided with both appendices and reports, you can do that on your own. So what is important is for you to know how those numbers are reported. So we have done profitability and we have also picked how many ratios under liquidity, 2 ratios, current ratios and quick ratios. So we have come to under working capital ratio. Working capital, the company's working capital is very, very deteriorating. It's in a bad situation. So, and that's what we have done here: inventory turnover, inventory days, receivable days, and payable days. So we are going to have a look at this and we'll analyze. By the time I open the analysis now, you understand how those numbers are moving. And please study the style of reporting and analysis. So management efficiency, we have done asset turnover, gearing and solvency. We've used debt to equity ratio, and then interest cover. So that's all about the first exhibit 1, which is on ratio analysis. And if you look at the reporting here, we have reported on that thing, on those numbers, based on each categories of ratios for profitability analysis. Let's look at what we reported here. The profitability position of SCPL deteriorated further in 2023. It was bad in 2022, and it got worse in 2023, based on what we are provided. The examiner may provide more additional financial statements, yes, maybe in your unseen. So if that is the case, you may have to calculate for those years as well. Do you understand? But based on our own Preseen, we did not suggest that. Do you understand? We did not suggest that. So you may provide maybe 2024. We only have 2022 and 2023. You may provide 2024 and 2025. You will not provide 2026 as a historical financial statement or financial figure because we are still in 2026. So if they will provide anything, it will be like a forecast. So, but you may expect 2 additional financial information or financial statements, 2024 and 2025, in the unseen, if examiners brings it out. Revenue declined significantly to 74% of its 2022 level, indicating a 25.6% contraction in market activity. So if you look at the financial statements that we displayed the other time, you would see that revenue reduced. And it reduced by what? By 78%. To 78%, it reduced by 25.6% of its number in 2022. Although cost of sales also reduced to 78.2% of the prior year, the reduction was insufficient to offset the revenue decline. Right? Gross profit margin worsened from minus 8.9% in 2022 to 14.5% in 2023, while net loss also declined further to 38.2%. So all these things that we are mentioning here, you can see the numbers here. They are in your appendices. And by the time you are bringing those numbers, you are analyzing them. In your brackets here, try to say all calculations. I purposely did not write it here. I wanted to write it while we are having a class so that you can remember. All calculations can be found in Appendix 1. So we have reported, we have analyzed the numbers. What is the implication of those numbers? The implication is that the corporations of SCPL are fundamentally unprofitable. They are doing business and they are not making profits. So they are not generating values from the production activities because their costs, the expenses are more than their revenue. And this is suggesting issues as inefficient production process, high input cost, poor product pricing or quality challenges. The persistence of negative margins implies that increased production without cost restructuring will further deepen losses. So you are not only telling us that number is moving from one to another, you're also telling us what does that mean? What does it imply for this particular company? Do you understand what it implies? What is the implication of those numbers on the company's performance? So same pattern we have used for liquidity analysis. We have reported the numbers, how it is moving. And don't forget, at the end of any of your analysis, just come here and say, all calculations. This is very, very important. Always relate the numbers you are presenting here to your appendices. Can be found in appendix, or you can say, please see appendix 1 for calculation. Please see appendix 1 for calculation. I hope it's clear, right? I hope it's clear, right? So it's very, very important.
Yes, sir.
Okay, it's very, very important. Please, if you understand what, please use the emoji. Just use the emoji, this thing to indicate that, okay, someone is saying it's not clear. Ngozi John is saying it's not clear. Please, Ngozi, what's not clear? Let me allow you to ask a question. Your question might be helpful to some other persons as well. So Ngozi, you are a co-host. Please tell me where it is not clear. Unmute and talk.
So, good evening, sir. First of all, you know that the screen is quite tiny. So, I'm not seeing where you are adding that caption. That caption of saying that all calculations are in the appendix 1 or 2. We are not seeing where you are adding it. I personally, I'm not seeing where the caption is, where you are
Can you
adding
see?
that caption.
Ngozi, are you using your phone or your system?
Phone. I'm using phone.
Okay, that's one of the fundamental issues.
Okay.
Because I've zoomed this out to the extent that it is about to enter my eye. But it's fine, don't worry. You are going to get these reports. And you will see where those captions
sir.
have been added. So the captions are being added at the end of each analysis, each interpretation. You have done ratios. But Ngozi, you agree with me that ratios does not make any sense if you don't interpret them. And that is what case study is all
Yes,
about.
sir. Yes, sir.
Interpreting those numbers. So we are only linking those interpretation to the calculation. Because those calculations you are doing at the back of your answer sheets, all these appendices, and where you will do the appendices is at the back of your answer booklets. Maybe the last 5 pages, open it and start your appendices from there. You understand? The standard of case study exam is that the report should come first, the appendix should come last. And you understand that you will not be able to analyze some of these numbers if you do not calculate them. So open 5 pages at the back, or maybe 6 pages, or at most 7 pages. It should be enough for all the calculations you want to do. Do you understand? It should be enough for all the calculations you want to do. So you open that back and start your, as you are doing that calculation, once you have done with one of the categories of ratios, let's say profitability ratios. Do not wait until you finish all the calculation before you come here and analyze the profitability. Do you understand? You come here and analyze the profitability, and after each analysis, put a caption here in bracket to say all calculations can be found in appendix 1. Because this is appendix 1. Is it clear now? Is it clear now? Everyone, is it clear?
Yes, sir, it's clear.
Okay. So we need to save our time because we still have to look at some of the important assumptions we have done in the unseen information. Okay, so same thing we have done for liquidity. So the same thing we have also done for what? For working capital management. You are just analyzing the ratios. And at the end of each analysis, put your caption that please see so appendices for calculations. Do you understand? Same thing we have done for operational efficiency. Please see appendix 1 for calculation. So gearing and solvency, the same thing. Please see appendix 1 for calculation. All these calculations we have done here are in appendix 1. Then after you are done with your main analysis, you conclude. So, okay, now these are the conclusions. I want someone to read the conclusions for us based on some of the analysis we have made on profitability, on liquidity, on working capital, on management efficiency. Ngozi, please read the conclusion for us. Let's take
Okay.
1 or 2 points under that
Where should I start
conclusion.
from? From profitability, SCPL
Wait, let me
continues to record persistent and
wait,
worsening.
let me scroll up.
Okay.
Start from the trend and ratio analysis.
Okay.
No,
Okay,
wait.
you have to scroll up, sir. It's not showing.
Ngozi, can you hear me?
I can hear you, sir.
Oh, yeah, start from the trend and ratio analysis. Revisit that.
Okay, the trend and ratio analysis. The trend and ratio analysis reveals that SCPL is experiencing significant financial deterioration across all key performance areas. 1. Profitability. SCPL continues to record persistent and worsening losses at all levels, including gross, operating, and net margins. The existence of a negative gross margin is particularly alarming as it indicates that the company is unable to recover its direct production cost from revenue generated. Liquidity. The company's liquidity position is critically weak as reflected in extremely low current and quick ratio. SCPL does not have sufficient liquid assets to meet its short-term obligation as they fall due, indicating acute cash flow constraints. The next one is working capital. SCPL working capital structure reveals an unstable and unsustainable dependence on supplier financing, evidenced by the significant increase in trade payable and extremely high payable period. Management efficiency. Poor utilization of assets. The decline in the asset turnover reflects a deterioration in the operation efficiency. I cannot see it anymore. You have to go up. Excuse me, sir. Excuse me, sir. You have to scroll up. I'm not seeing it anymore. No, scroll up. Scroll up. I have read up to, management efficiency. Okay, so the next one is
you are in management
efficiency.
Okay, wait, I'm coming.
Yes.
I think the network is lagging. Okay, wait. Just hold on. The network is lagging. Oh, yeah, read now. Can you see it now? Oh, sorry. Can you see it now? Yeah, read.
You are not in. You are in recommendation.
It's showing now. It's showing now.
It's showing now.
Okay.
I think it's your network.
Management efficiency. Can you hear me, sir?
Yes, I can.
Okay, poor utilization of assets. The decline in asset turnover reflects a deterioration in the operational efficiency, indicating that SCPL is not effectively utilizing its asset base to generate revenue. And then the gearing, SCPL capital structure is characterized by excessive leverage and rapidly eroding equity base. The sharp increase in the debt to equity ratio indicate that the company is heavily reliant on borrowed funds to finance its operations.
Okay, that's all about the conclusions. So for each of those conclusions, there's a recommendation. For example, for the first conclusion, profitability, the first recommendation we have here relates to it. Same thing with the second, the third conclusion. Do you understand? So what the recommendation is talking about is talking about some solutions that you are advising the management or the board on. Do you understand? So, Mungwasi, you can read the recommendations for us to let us pick some nuggets from that.
Okay. Recommendations. To address the issue of persistent and worsening losses, SCPL must undertake a comprehensive
Can
operational
anybody hear
and
me?
pricing reconstructing program. I can hear you, sir. I can hear you, sir.
She's reading.
I'm reading already.
She's reading.
I think it's his network.
It's not here. It seems it's not here.
His network. Is his network. Hello, sir. Are you back?
Okay.
The screen is not showing. I don't know if it's okay. It's showing now. To address the issue of persistent and worsening losses, SCPL must undertake a comprehensive operational. It has left. SCPL must undertake a comprehensive operational price restructuring program. A robust quality improvement initiative should be implemented to reduce product rejection rates in export markets. This should include investment in quality control system, staff training, and compliance with international standards. 3. The company urgently requires a working capital injection, which can be achieved through equity funding from new investors and strategic partnership, e.g., international cocoa processors. Next, short-term action should also include tight control of discretionary expenditure, ensuring that available cash is prioritized for core operational needs, such as raw material procurement and plant maintenance. Next, the company should immediately engage with key suppliers to renegotiate payment terms and restructure outstanding obligations, hereby restoring supplier confidence and securing continuity of supply. Next, inventory management should be improved through the adoption of just-in-time system, reducing excessive inventory holding and freeing up cash tied down in stock. This is consistent with the company's strategic direction. So I have to scrub.
Okay, can you hear me? Can anyone hear me?
I can hear you, sir.
Mhm.
Scroll up.
Yes.
Okay.
Yes, we can.
Sir. Okay. The company should invest in modernizing and maintaining its production facilities, as outdated equipment has been identified as a key contributor to inefficiency and product quality issue. And last, to address its highly leveraged position, SCPL must undertake urgent capital restructuring by pursuing equity injection from new or existing investors to tighten its capital base and improve its debt capacity. This will reduce the financial risk associated with excessive reliance on debts.
Thank you so much. So that's all about requirement 1, financial statement analysis. So, and ladies and gentlemen, once you finish requirement 1 first, you know what you should do? Go to the executive summary and summarize that first before you move to any other requirements. The reason why you are doing that is because at least you have done one requirements. This executive summary. What does executive summary entail? What executive summary is saying is that summarize in 2 pages what your report is talking about. For people that are busy, for management staff, for executive directors who really do not have time to go through pages of reports so that they can easily understand what the report is talking about. So executive summary is talking about the report. And if you see the way we started it, what did we say? Ngozi, please read the scope and objective.
Okay. The scope and objective. This report provides an analysis of the financial performance of Sedico Cocoa Processing Limited, covering management performance on profitability, liquidity, financial management, and operational efficiency. It also examines an evaluation of the proposal that management is considering using relevant costing and contribution analysis technique. A report is also issued on the capital restructuring and background integration assessment of certain company highlighting
backward
okay
and backward integration.
Okay, and backward integration assessment of set company, highlighting areas of risk and exposure for the consideration of the board.
Okay, so from that thing that you read under scope and objective, you would agree with me that this scope and objective is summarizing the introduction, right? Because all the information we have, in fact, first and second paragraph of introduction is what we just summarized here. So executive summary is just summarizing what you have done, your report, and that is why we say it should be written last. It's just like an abstract. So you cannot start the report and say you are writing executive summary first, because what are you summarizing? Do you understand? You have to finish at least a part of the report. Now we are done with requirement 1. We want to summarize it. And the reason why we are doing that is we are thinking strategically. We are trying to manage our time. We are trying to maximize it. So we do not want to take a chance to say we have to finish all the requirements. The requirements might be 3, sometimes it might be 4. If the examiner just added this and padded it, it might take up to 4 requirements, sub requirements, and as the case may be. So instead of saying that, okay, you want to finish everything before you now come to executive summary, time may not be on your side. So once you finish one of the requirements, let's say requirement 1, in this our case now, we have analyzed requirement 1, we have concluded on this, and we have recommended. Come to executive summary and put something here. Key findings. The company's profitability position is critically weak. You see, this particular paragraph here is summarizing all the body of your analysis. As long as it is, all those
Can you still hear him? Sorry.
No, we can't hear him.
That means it's from his end. Sorry, sir. Are you still on call? We cannot hear you, sir.
So am I the only one? But I can't hear anything. No.
You are not the only one. That's why I've dropped in a message. Perhaps his network
Okay, okay.
is.
Is that okay? Okay, okay. Thank you.
Yeah.
Hi, all. Can you guys hear me?
Yes, we
We
are
can hear
with
you
you.
now, sir. I don't know about
We
your
can hear you
side,
now.
but I can hear you.
Okay, let's continue. Okay, let's continue.
All right, sir.
Okay. So I'm sharing my screen. Confirm that you can see it. Can you see it?
Not yet.
Not yet. Oh.
Okay, yes, wait. How about now?
No.
Okay, let me stop sharing and reshare then. Just hold on. It's taking time to share screen. I don't know why. Okay, I think it has shown. Can you see my screen now?
It's trying to. Not yet.
Okay, let me stop sharing. I will share. And this thing has been going smoothly until Nigeria wants to happen to our network. Google Meet is sharing your screen. And so it should share now. So why is it taking time? Which kind pattern is this now? Okay, I think it has shared though. Okay.
Yes.
Yeah, let's continue. So I was walking us through the executive summary. And the fact that once you finish the first, is my screen shown now?
Yes, it's showing now. It's showing.
Okay, so, and I was pointing out the fact that the moment you finish your requirements one, before you start all other requirements, go to the executive summary and put some things there. Bring in maybe 2 or 3 conclusions and 2 or 3 recommendations for that requirement one, and you create lines, leave lines for the other requirements, so that by the time you are done with them, you can also fix it in those lines of the executive summary. Please, executive summary is very, very important. It carries 20 marks. And the reason why I'm using this approach is for you not to miss that mark, all in the name of time was not sufficient for us. So if you look at the conclusions we have here and recommendations, they are not different from the conclusions and recommendations you have in your main, but that one that Ngozi just read out for us now. Do you understand? So that's how it works. So it's not something that is very, very difficult. By the time we just get this report, the way we are working through is like this. Take your time and read it. Someone who is lazy may find it difficult to scale through this exam. You do not have to be lazy, because after you have read your question inside the exam hall, the next thing is to do is to write. So start writing from now. Don't wait until you get to the examination before you start writing reports, practice reports now. It will be very, very good for you to do that. As you are writing, as you are solving those things, as you are working through that solution provided to you, if you come across anything you don't understand, or you feel that, okay, I don't think it should be done this way, you raise it, you ask questions. So it will be better like that, rather than not just doing anything at all. So that's about requirement one. Then requirement 2 is the evaluation of financial performance of Sadeco Cocoa Processing Limited. So there's an exhibit, there's an appendix for that. Okay, no, that's not requirement 2. This requirement 2, evaluation of proposed strategic alliance with Barry Callebaut International, BCI. So you have seen how it is being written. What we did first is to set up a context of why this proposal is necessary. So it is necessary because the company is in a financial distress and they need a total working capital and liquidity overall. So something has to be done. And that is why this strategic alliance was entered into. So you will get your appendix in Appendix 2, I've done some calculations for you, and some things. What I also did in that second requirement is that aside from calculating the numbers, I also analyze. Aside from doing calculation, we did contribution analysis. But aside from doing that, what we also did was to analyze those numbers based on how they are given. Just looking at the numbers, how they are given, and analyze this like that. So if you read it, our time will not permit us, because we have used almost 2.5 hours on this call now. And what is more important is for you to practice this, right? Because even if you use 10 hours on this call, you will still have questions. You still have to go and practice on your own. No matter the hours you use on this call, you will not get that 100% understanding. That's the truth of the matter. Or the highest you could get would be maybe 60. 70 if you are an exceptional above average student, right? So, but you are going to reach to a point of 80% assimilation and understanding when you do it on your own. And you are stuck somewhere. You have a roadblock, there's a bottleneck, and you come back and ask, I don't understand. They explain to you, understand. You are going to get to a 90% understanding when you know it to the extent that you can teach others, you can explain to others. You understand? So that is a constant way of doing things. So we've analyzed this based on some of the information that was provided in that exhibit. Is it exhibit 9? Yes, exhibit 9, exhibit 10, and exhibit 11. And we also did an analysis here on the working capital. Some persons are asking, I think when we were doing our daily, they were asking about where will ethical consideration, ethical issues come in. Ethical issue will come in under one of the requirements. It doesn't usually come in under financial statement analysis. It usually comes in under financial data analysis. By the time you are analyzing your data, ethical and other non-financial consideration would come in. What does it mean? It means that, okay, the fact that you are having these numbers, you have analyzed this particular data using the financial numbers, there are some other non-financial information that needs to be taken into consideration. By the time you get this, please read it. The style of reporting is very, very simple. The English is relatable. You should be able to understand. You cannot cram this, right? And the reason is because as small as it is, the page is just 11 pages, but it is much. If you write it out, what you are expected to do is to understand the style. You can cram all this. How do you cram all this? But once you have studied it to the extent that you understand how those things are moving, why we are analyzing this, why we are saying this one is increasing, you should be able to do it on your own by the time you get to examination hall. So we recommended based on that, and this one is where we did the capital reconstruction. There is an exhibit, I think exhibit 3 or so on capital reconstruction. And after that, we did an evaluation of the proposal with Okeogun Cooperative Society. We did that evaluation, we concluded, and we recommended, right? And after those recommendations, I think at the end of the report, you would see, as well as regard, you sign, make sure you sign your reports. So then here, what name are you using? Are you using your name or you're using the name of your partner? Me, I used to recommend that you use your partner's name because you are writing this report for him and your own report is only drafts. So he will be the one to sign. You are not in a capacity to sign a report that is going outside your firm. So because you are a trainee, you are a graduate trainee in that company. So, and from the email that your boss, your partner sent to you, he said drafts for his own review. So he will be the person to sign. So put his name here and you sign. It's not an issue. Just sign and you have finalized your report. And after you are done with this, the spaces you left for the other requirements in your executive summary, go back to there and impute those things. Just find a way, impute it. Find a way, put the lines you have left for its own conclusion, put it there. Find a way, the lines you have left for its recommendation, just bring it there. For example, now, these last 3 recommendations here are for capital reconstruction, the strategic and alliance with BCI, and the proposal with Okeogun. Same thing with recommendations here, right? And this one here, the major finding, the second paragraph of the key findings here is talking about the capital reconstruction, the strategic alliance with BCI, and the proposal, business proposal with Okeogun Cooperative Society. So, but you will not be able to write this executive summary if you had not done the actual reports. So, ladies and gentlemen, in order for us to save our time, you are going to have this report and the appendices. Please take your time, solve it. Like I mentioned, I'm repeating this and I'm emphasizing it. Do not just read. You will do yourself a disservice, a great disservice, if you do not speak your Bible and start writing this. Both the appendices, the calculation, and the reports. It is by then, it is that time that it will make sense to you. So, on a final note, I want to walk us through what is the necessary style that you need to use for providing case study examination in the examination hall. What should be the first thing you should look out for? To get your answer booklets, the style, the process, the step you need to follow. That's what I want to walk us to now on a final note. Yes, it is important that you know what to do, but more important is how fast you are able to do it, most especially when it has to do with examination. For those of you that have these summary notes, the last part of that summary notes is talking about the careful steps to approach case study question in the examination. Now, this is very, very important. The first thing you need to do, one, identify your requirements. Can you guys hear me? Please confirm that you can hear me and you can see my screen.
We can hear
Okay,
you, sir.
I think I need to stop that. So can you see my screen? Careful steps to approach case study question in the examination. Can you see it?
Yes, please.
Okay, the first step is to identify your requirements. Then, once you identify your requirement, that means you start by reviewing the first exhibits in the unseen section. This is where your exam requirements are clearly stated. Understand what each requirement is asking before you begin to write. Step 2, structure your answer booklets properly. Page 1, start with your cover page. For that, someone was asking in the group that doesn't know what to put in the cover page. And I wondered whether the person did not join us from the start of this class, because I displayed the information you would have in your cover page. Clearly, those information are what you should have in your cover page. I also displayed your introduction. In fact, we read us in introduction. If you can just adopt that, you are fine. Page 2 and 3, leave blank for your executive summary. That is to be written later. You can see in brackets. Page 4, draft your introduction. You may adapt from the solution if available. Yes, it's available. You can adapt what we are going to provide to you. Step 3, tackle the requirements strategically. Big requirement 1 or any requirement you find easier. For easy requirements, ensure you include main analysis, conclusion, recommendations. That's what we have done. That's the pattern we have followed. Requirement 1, we did the main analysis. After we have solved, we have calculated in the appendices, we analyzed it, concluded, and we recommended. After completing a requirement, go back and write your executive summary for it. Leave space for the executive summary for the next requirements. Number 4, time management is key. You only have 4 hours. Once you have 1 hour left, stop whatever you are doing and write your executive summary, if you haven't done that already. Read the case quickly and jot down key points as you go. Avoid rereading multiple times. There's no time for you to read and be reading all over. The pages are much. Number 5, focus on reporting, not calculation. This is very, very important. All your calculations only carry 10 marks. So you should focus on that reporting, not the calculation. The case study exam emphasizes report writing over detailed calculation. Your calculation does not carry much mark. You have more subjects that you have done calculation. SFM, CR, tax, you have done calculation. In skills level, FR, PM, tax, and PSAP, you have done calculation in all those ones, right? So this one is not about calculation, it's about what? Reports and analysis. Do less calculation and more structured analysis and reporting. Don't wait till you finish all calculation before you start writing your reports. The small calculation you have done, write report on it. It's very, very important.
Couldn't hear you again, sir.
Try to. The executive director is asking, they expect you to finish it in 4 hours. So you can't finish it. All you just have to do is to do your best, stay composed, focus on quality over quantity. Then final touches, ensure your report is organized and professionally signed off. Whether you finish or not, your presentation matters. It is not whether you finish. Pray before, after your exam, stay positive and focused. You are prepared well. Now, it is time to deliver. Ladies and gentlemen, we have come to the end of our...
Please, sir, don't go yet. Don't go.
We are not going yet.
Okay.
We are not going yet. So guys, this is the end of our class, right? We'll accommodate questions, couple of questions for us, so that the ruling line is that you can attend to all questions, right? It is more important that you get this and you practice, you keep the group open in case some questions are coming. We are going to be addressing them. Do you understand? So we are going to be addressing them. So someone is saying, but we cannot write reports without calculation. Yes, you have to calculate. What we are saying is that you should not focus too much on the calculation. So you should not focus too much on the calculation. Someone is asking about capital reconstruction. It's in your report. It is done. So we can't go through everything here. So once you get your appendix and your reports, you would have it there. Everything is there. Someone is saying share the how to write case study guide and how to answer it. That particular one, okay, it's in the summary note, right? But I'm going to share something, right, so that you guys can follow it. But more importantly, all the solutions that we have provided is in that in this suggested solution. You will have it. Make sure you practice. Immediately after this class, you will have that. And then, so please, for those of you that joined late, because I see some persons asking about where we can find our requirements and the likes. That means you did not join the class from the beginning. So you did not join the class from the beginning. So please, you can go through the recording once we make it available. How do we include the ethical issues? I already explained it. Ethical issues will be related to one of the requirements, middle requirements too. So, and it is in your reports. Are we expecting to write to government for grants? If your examiner do not say anything on that, please, that's not your business, right? You are working based on the requirements. Writing for government for grants. It doesn't mean that every situation that you have in the report, you have to provide answer on it. No. It doesn't necessarily mean that. Do you understand? So some information you ignore it. Just focus on the requirements and provide answer based on that. Ngozi, you have a question. Please ask your question. If any other person that has a question, please raise your hand. I will call you.
And hello, sir.
Yes.
My question is, the cover page you gave us is self-sufficient. Can we lacram la boys like that? Wait, that's number one. Then number two, the intro that you gave us, the intro from what we are doing now, the intro, is it also self-sufficient, or we should wait and see what will be required of us in the exam, or we should just learn
Yeah.
the technique, how to write it there and use what is in the
Is
exam, or is it self-sufficient?
is the technique that is very, very important, right? It's the technique that's very, very important. So because these requirements that you have is our own suggestion, your examiner may come up with a different requirements. So and that requirement will impact your cover page and your introduction. It will impact everything you want to do. Do you understand? So but the style, the pattern will not be different. Is that clear, Ngozi? Okay.
It's very clear, sir.
Okay, so for someone who is asking about the how many pages you are leaving for reports, I've already said it. 5 pages at the back of your answer booklet is for your appendices. So the remaining is for your reports. So the question, I don't understand. If you are using 5 pages at the back of your answer booklets for your appendices, the remaining is for your reports. It's as simple as that. It's as simple as that. How do you calculate capital in construction? You will see it in your appendix and your reports. Please focus more on how those things are reported. Reporting is very, very important. Study that style. Another thing I will mention here, someone is asking whether it's an external or internal report. That person did not join our classes. That person did not join our class. It's an external report, and it is seen from the cover page. It's very, very simple. So someone is asking whether we are going to number our answer booklets. Your answer booklets are already numbered, so you won't have to number it. You won't have to number it. So everything is already numbered. So guys, sustainability reports, if your examiner does not ask, please leave it. Sir, is there no indication of CSME model as part of the requirements? If your examiner does not ask any CSME model, ignore it. Requirements, again, your requirements. I repeat, your requirement. It is the examiner requirements that is very, very important. Table of content is not necessary. Leave it out. There was no place in your study pack that your examiner mentioned table of content, so just leave it out. So you understand. So guys, this is where we are going to stop for tonight. So you are going to get these reports, the appendices and the report, so that you can practice. So we will not be able to attend to all questions, but the group will be left open so that you can drop your questions in there in case you have them. So ladies and gentlemen, thank you for your patience. Or any question we have not attended to, please take it to the group. And
Sir,
yes.
sir, I have a question, sir.
Okay, please ask your question.
Okay, this is it. Regarding the reservation, the assumption, like that, is it
Okay.
included in? Is it going to be included in the body of
Yes,
the
that's
report?
why. No, it's in the executive summary.
It's an executive summary. Okay.
So just adopt that style of report. See, the report you are going to have, you may have different reports from other places. Please stick to one. I'm not telling you that this one is the one you should use. So, guys, but these reports that we are provided this in a way that it will be very, very easy for you, something that you should be able to provide or answer in 4 hours in the examination hall. So you may see some other reports that are different, the way they wrote it. There is no one-way answer. And that is why ICANN is not providing reports in the Pathfinder, because there are different ways. Do you understand? There are different ways. So So guys, I wish you best of luck. We started with prayer. Let's also just round it up with prayer. May God.
Can I say something before you close?
Who is that?
Ngozi, sir.
Ngozi, what do you have to say again? This guy.
I'm not saying anything. I just want to confirm. Sorry, sir. What I want to say is that, you know that this case study is much and we don't have a lot of time, right? So from what you've taught us this night, I can deduce something. I just want to confirm if what I learned is accurate or not. Now you are saying that from our requirements, like you said, that we should not base on calculation alone. So now from our requirements, they've told us what analysis. We should have our financial analysis. So once we've calculated that financial analysis, we should bring it to our body of our letter and then take it to our executive summary immediately. Before doing any other calculation. Is that what you said? So I want to be sure.
That's what I'm saying. So that you can manage your time.
Our appendices, we'll bring to the body of our letter and then recommend, conclude, and then bring the summary of the recommendation and conclusion to our executive summary before going to any other requirements, right?
Yes, so that you can manage your time properly.
Manage time.
Okay, because the calculation can lure you to wasting much time on it. And mind you, this is 10 marks alone. So that is why you have to just properly. We've seen cases of people who did not really, the only thing most of them did was just requirements one. They did not really do much on the other requirement. They passed. Why? Because they were able to finish the analysis, the conclusion, the recommendation, and they brought it to executive summary. So if in the course of doing other ones, time does not permit you, at least you are fine with that requirements. You understand? So that is why we have been used. You cannot finish all the calculations. You cannot finish all the calculations. Okay, guys. Before Ngozi, we remember another thing. I think we need to just draw the curtain here tonight. Before Ngozi, we remember another thing. Okay, I said we need to end it with a prayer. Ngozi, please pray for us. Let's paper. Not only this,
in Jesus' name.
Wait, before you start, someone is saying, please answer us too now. Please, Mr. Is it Mr. or Mrs.? We cannot attend to every question here. I think I mentioned this. This is already 8. So it's now we can attend to all the questions. The group will be left open. Come to the group, drop your question there. Whether your hand is up or not, we cannot attend to all the questions. I see all the hands. So if you are here, someone is saying, I raise my hand. Other person also raise hand. It's not only your hand that is up. So if we attend to you, how about other people that raise their hand? So that is why we are saying all the questions asked in the group, I will pick them and answer those questions together so that your hand will not be paining you. Lower the hand and let us get the solution. Go and practice it. Do you understand? So that is as simple. So please let's wrap this up.
Okay. In Jesus' name. Father, we thank you for the opportunity. We thank you for the tutor that you've used this night for us. And we are committing everything to your hands. And we are praying and asking that our efforts will not go to waste. As we have put so much effort, Father, crown all our efforts with good results. This and more we pray for. And for other papers too, we are praying that will come out in flying colors. Amen.
Amen, guys. I wish you best of luck. From all of us at Apex Students, Apex Professional Associates, we wish you all success in your examination. And then by the time you are writing, you remember what you read, you put it down in a way that the examiner is requesting it, and the success will be yours. Thank you, guys. Enjoy the rest of your evening. You are going to have the reports immediately after the class ends, and the recording will have to be processed. So you won't have it immediately. Once it is done processing, you will get it. Good luck to you guys. Bye.
All right, thanks.